This clip aims to help all stakeholders focus on real perspective and potential of crowdfunding for creative and cultural firms, beyond the use that has been done of this alternative finance powerful tool until now. Today, creative economy definitions are typically tied to efforts to measure economic activity in a specific geography. A relevant set of art, culture, design, and innovation industries is determined, and the economic contribution of those industries is assessed within a region. A unique set of industries defines each local creative economy, reflecting real intangible but highly generative assets. To get the relevance of creative industries in Europe, we can consider latest data from Eurostat. In 2015, there were 1.5 million cultural enterprises in the EU, generating 200 billion of value added. 80% of people employed in the cultural sector in the EU worked in a small or medium-sized enterprise. Running a crowdfunding campaign related to creative sector very often serves other purposes beyond finance, such as audience development, community engagement, skills development, promotion and market research, making it an interesting tool for multiple types of creative and cultural actors, including publicly owned cultural institutions. But it could be the most relevant way of making young and small creative enterprises more solid and stable. Let's have a fast recap of crowdfunding models that could be useful for SMI in creative field. With loan-based crowdfunding, companies and individuals must repay the sum of money borrowed from backers. Repayment varies depending on whether the campaign relates to socially relevant causes and on the business model chosen among the following ones. Advance sale is a sort of improper loan, meaning that campaign proponents ask potential backers for advance financing on a product or service, ordering it and then actually booking it. Such an operation replaces the more traditional test market, giving a real and concrete feedback on a product's potential of market penetration. The motivation behind the donation is the desire to implement the creation of a product we would like to have and benefit from a lower cost than its market value. Loan-based crowdfunding allows companies to borrow money from a group of people rather than a bank. The platform's role varies depending on the condition set of repayment. The loan can be traditional, built on a standard condition, refunding the donation with interest. In this case, the loans may or may not be secured, depending on the platform used. Otherwise, it could be grant funding. Contributions are repaid if and when the project starts to generate revenue, or if and when the project starts to generate profits. Social lending is an important typology of crowdfunding. Some platforms charge no interest loan to valuable social projects. This is the case of microfinancing offered to developing countries, where loans can have a systemic impact, helping to establish new economy realities with positive effects on the whole of the social fabric. Equity crowdfunding is similar to standard equity investment, where individuals give money to a company and receive ownership of a piece of the business. There exist two types of equity crowdfunding: investment securities. Investors acquire company shares, receiving ownership of the company or royalties. Revenue sharing. Investors receive part of the revenues or profits generated by the project. One of the most relevant problems for SMI about using crowdfunding in a different and more effective way involving ventures is how to present the activities, giving them the right dimension. USA gives a wider overview of possibilities. According to a 2018 report from Upstart Collab, a firm that connects impact investing to the creative economy, and Rockefeller Philanthropy Advisors, a non-profit organization that currently advises on and manages more than 200 million in annual giving, international funds are working a lot with creative small and medium enterprises. The study identified 107 funds that have been investing in the creative economy and assessed this activity by fund type, creative economy category, and asset class. Among investment analyzed, more than 90% of total funds, on a basis of more than $500 million, went to creative-oriented activities, the most in the sustainable food category, with nearly half of the funds investing, followed by other creative business, 28% of fund investing, ethical fashion, 27%, and social impact media, 24%. Creative Places was the smallest category, with 16% of fund investing. The scenario that depicts covers a wide range of categories you can focus on to assess how creative SMI should present or redevelop itself and its own activities to investors in a charming and attractive way.